Good morning, traders. I'm Dennis Dick, and this is Premarket Info.
And I'm Joel Elconin.
On today's show, we're going to talk about Priceline falling 100 points last night off their earnings report. Earnings from Disney, Dean Foods, Soda, McDonald's, same-store sales as well. Potential double top in Apple. Sector rotation, defensive names are showing some weakness, and other cyclicals are starting to show some strength. And we've had a lot of tight ranges this week.
So what does it all mean here, Dennis? We've had a really nice run-up in the market. The S&P's got over 1,400 yesterday, 1,403 and a quarter. That's been the high of the move. That's our bogey on the upside. Kind of sold off near the close, settling at 13.97, and boy, that didn't hold for more than 30 seconds off the open. Looking at major support, 13.87 and a quarter, 87 and a half, double bottom from Monday and Tuesday. That is the level of the day.
1387 is big here. It was the old resistance level that we had cited earlier on where we had multiple tops. Now it's just the classic scenario where old resistance becomes new support, and that 1387 is critical for this market to hold. A little bit of a reversal yesterday. Just we were strong most of the day, but in the last couple of hours obviously just kept drifting down. And here we're not showing too much. We're showing a little weakness here again. 1390, 175. We're down 5 points here.
Yeah, and thanks to Priceline.
I think so. Priceline is absolutely getting murdered here. They reported last night their guidance was bad, which is why they're guiding from down to $11.10 to $12.10 for next quarter. Analysts had estimates up at $12.76, so they're going to miss handily next quarter. And the stock is, I don't remember the last time I've seen a stock fall 110 points here. It's trading $5.79 right now. Actually, I guess it's down 100 points after closing at $6.79. That is insane.
I don't remember ever seeing a stock fall 100 points. But before we get into the technicals on and discuss Priceline here, I just would like you to bring up a quick chart of Chipotle Mexican Grill here for you folks that see a stock drop, 70, 80, 90 bucks and think it's going right back up. Well, here's a good example of a stock that gapped down, had a big gap down day, and just went lower. But going to the Priceline, I mean, if this is not a reason not to own Apple or Google or any other stock that is a $500-$600 stock, this is a prime example. I mean, $100. I mean, that's gotta hurt no matter how, no matter what your cost basis in this. But looking at the stock immediately after the news came out, it made a low at 565.31. Now, since we've hit that low, we've had a bounce up to the 585 area, and that's been resistance. So those are two major points for the day. The last time it tried to make a run at that 565 level, it got halted at 570. So support had moved up from 565 to 570. So keep an eye on those two levels.
I've got to keep an eye on this 600 psychological level too. We sliced through that like a hot knife through butter last night on the report. But if this thing starts to rally back up, you got to think we had a double top here back from May 20, or double bottom, sorry, back on May 20. Well, actually, that's not true. I've got to go back further here. I'm just trying to find. We bottomed here, right here, 603.49 and 604.65 on June 1st and June 4th. So I'm calling that whole area of 600 of where we sliced through. It gets back up into that 600 handle. I think you're going to see sellers all over the place. So this isn't one I think that's going to rally right back. But if it rallied another $20 from here, I think you'll find some sellers.
Yeah, I mean, there's that's a pretty big rally here, another 20 points, but considering it's
down 100, so stuff does bounce around.
I don't know. I don't think it's going to see that 600 today. I think the HFT guys
just
are going to
keep slamming it down.
Yeah, be up over that. I mean, there's a lot of people. I mean, anybody that's been in this stock, in the 600 handle, and was feeling fat and happy when it ran up.
Out.
Yeah,
they want out.
766. I mean, Whew, that's a heck of a drop. I mean, maybe they'll consider splitting their stock right now.
Expedia is down in sympathy with this EXPE. It had been up at its 52-week high there, 58.87, closing right on it almost. Pulling back a couple bucks here. It's down $2.32 here this morning. Had a heck of a run up here too, so this is one I don't know if I'd be picking bottoms on this one either.
Wow, especially with that
I
gap in
know.
there. I mean, that's just a gap begging to be filled here. I'm telling you, 45.94 to 53.66, basically 8-point gap here in the stock. Buyer beware in that
Buyer
stock.
beware in that for sure. Disney did report after the bell too. Actually, we highlighted this trend earlier on, and after hours it got right to about the bottom of that trend, right around 48 bucks. Just off the initial report, did bounce back up, is down only 60 cents now, 49.20. Reason the revenue was a little bit light. They beat actually was a $1.01 they reported against estimates of 93 cents, but they were light on the revenue, 11.09 billion against estimates of 11.32 billion. So that's why the stock is trading down here on the report, but not nearly as bad as it got down to last night. Somebody really overshot selling that thing down to 48.
Yeah, and I'll tell you, whoever overshot selling at 48 is definitely earmarking this 49.50 level. It's come up there several times in the pre-market. It's been rejected each time. And just going back to the old support, new resistance level, you had the three previous lows between 49.36 and 49.72. So in this decimal age, we'll call that whole area 49.50. That's where we're topping out in the pre-market. Looks like a great level to focus on the upside. Coming back on the downside, I agree. I think they overshot going to that $48 level. There is a bottom from 4 days ago at 48.13. So things really get in motion. Look for that 48.13 to 48 even level.
One stock flying off the earnings report and a potential spinoff. Dean Foods. This is insane. I never think a food stock could rally 4 points just like this. It closed at 12.42. It's up at 16.42. Look where it's coming into. It's coming right into all these highs we set back in late June. This whole $17 handle. We're at 16.50 now. They beat on the number, and what are they doing? Some type of spinoff or something?
Yeah, they're spinning off their organic dairy unit, and I'm sure you eat a lot of that stuff. Their white wave unit, they're spinning off. That is automatically increasing the value of the company by 33%. 4 points. Boy, I just don't know what to say about this. The only
It's
reference
insane.
point you have, it's making new highs in the pre-market right now. 16.51's the high. So I'd keep an eye on that level. And then you're looking at this juicy top here
Oh,
at 17 and a quarter. 16.96 was your high July 5th.
look.
July 3rd, high 17 and a quarter. So people must have bought a lot of organic stuff for the 4th of July. Geez, $17 I'd have to keep an eye on
Oh.
if I was long
I'm
this
licking
stock.
my chops, looking that area for a potential short. You hate to short a stock that's up 30% here, but man, when it's coming into a technical level like this, we got reference points all over the place. Obviously, it starts to take out that 17 and a quarter high. Probably start to get nervous, but I gotta think in these upper 16s, low 17s, you're gonna find some people, find some sellers here that obviously got caught in the early July sell-off there. Rally looks insane to me, but who knows? This market's kind of funny. McDonald's here reporting same-store sales, Joel, for July. They're not good. 86 and a half. It's trading at right now. Closed at 89.01. So Mickey D's going to come back and looks like it may even test these lows we set in June, where we had this almost type of triple bottom, the 86 area.
Yeah, just to go back real quickly to that Dean Foods. It's up on a quarter of a million shares. It trades over 6 million a day. So, balance that when you're taking a look at the stock. Mickey D's, I mean, this thing has fallen off a cliff since the beginning of the year. Although I heard yesterday they might start serving curly fries in the U.S., so that might help the stock. Just the shine is off the stock. The darling of last year has just been getting pounded. Looking at the pre-market, you've already come down to the 85 level. That coincides here with not much. It even took out. Oh yeah. 85.92 was a lot low on June 8th. A lot of times we've seen with Mickey D's, I mean, it's down here on 50,000 shares. Once again, a real thick stock. A lot of times you see these big moves in the pre-market and they do not reach, the levels that they did in the regular session during the pre-market. So 86 is huge in Mickey D's.
I love this 86 level. I think this is a nice technical setup with those two bottoms we had early June and then again at that 85.92 level. Look for the little washout through 86. Sometimes the high-frequency traders like to print it through the big number, hit some stops, and then buy the stock back. So don't be surprised this thing, if it was to cut through, if it bottoms just under 86 or like 85, 85 or something. But I love that level.
Yeah, and also from the perspective traders, when you don't have a position in something, let's say you didn't come in long or short Mickey D's. If you were long, obviously you'd be gassing here, looking for an exit. But if you were short and you get this kind of drop in the pre-market on relatively little volume, boy, I tell you,
it. Just like a fat kid on a Smartie, all over that.
Yeah, it'd be a little tempting there.
SODA, soda. Soda getting a pop here, Joel.
Oh, yeah. I bet you they won't use that on CNBC.
44.60 right now on their earnings report. 52 cents against estimates of 46. They're raising guidance. The stock looking actually pretty good here. This is one, I haven't loved this stock for a long time, obviously, since it had that big fall back in July. But you got to respect, in July of 2011 actually, but you got to respect it's consolidated a lot here, especially in the last few months in this whole $30 area, and then started to run, pulled back a bit, and then started to run here again, and now we're breaking out new 52-week highs.
Yeah, the high in the pre-market was 46.43, almost $2 away from the current level, so that would be ultra super resistance. Just looking at the chart here, obviously, what a wild day in this thing yesterday. Hit 43.70 and then came back all the way down and closed at 41.25. I guess I would just keep my eye on this whole $43.70 to $44 level. Tepidly playing it from the long side, but if you get a break under 44, I think you'll see some pretty good selling in this stock.
One stock selling off on earnings, Ralph Lauren RL. They did beat 207 or 203 against estimates of 178, but looks like they're a little light on their next quarter, or light on their next quarter sales here. 147.50 is where it's trading at right now after closing at 153.03. So here's one that was breaking out going into the earnings report, but pulling right back in here into the whole area where it's been trading for the last month. This on 140s.
Do you have any retailers in your portfolio? Because
no,
if you do, I'd get them the hell out of there.
I'm not a big... Yeah, you know what? They've done really well, too. Like, the retailers have been performing well, but I don't know. I'm skeptical on a lot of these retail moves.
Oh, man. Well, looks like someone hit the buy button instead of the sell button on this, because we did pop up to 158.80 and then immediately, just
It's a news algo again. That's
news algo.
Yeah. Then so what happens? They see the headline beat 203, 178. They're trading right off the headline, but they don't read the fine print, so they buy the thing up to 100. What do they go? 158? You said?
Yeah, $158.
$158, and then boom, comes straight back down on them. They're already down 10 points. Man, whoever's running that algo, I know it works sometimes, but man, they're getting beat up on some stocks here too. So kind of ridiculous that they'll buy that stock up and then all of a sudden it takes off. They're just trading off the headline number.
Yeah, maybe they hired a programmer from Knight.
I don't know, man. But I that algorithm, I've watched it lose money. We watched it lose money in Microsoft. We watched it lose money in got to be 5 or 6 stocks so far. We've seen it lose some serious amounts of money. Even in Visa, I remember it was getting killed in Visa. So it buys off the headline. Sometimes it's right, I guess, if you get the follow through. But man, more often than not, I think it's been wrong. So not all your high frequency traders are that smart. I'll tell you that.
Well, just looking at Ralph Lauren, had a run just 5 short days ago. The stock was at 136.59, hit 156.68 yesterday, selling off. The low in the pre-market is 146. That coincides with the low that you had on 2 days ago at 146.10. So that's going to be a major area of support here. If it gets to there, You had the 3-day low at 142.50. Coming back on the upside here after making that low at 146, running into minor resistance at 149.
Okay, let's look at this Apple chart because you were highlighting and talking to me this morning. I didn't notice. There's a potential double top here in Apple put into place. These are key technical formations. When you see double tops and double bottoms, technical traders do take note of this. We had a high of 624.87 on August the 6th, and yesterday we had a high of 625. So obviously with a $600 stock, that's about as close to a double top as you're going to get. So this whole 625 area becomes interesting. Stock pulling back 618. Now that it's in place, is this thing going to see 600 again?
Well, I was looking at on the weekly outlook, it's starting to bunch up at that 620 area, but the market was just too strong. It took it through there. And then yesterday you get up, you make that double top. You only have a 7-point range in the issue. Close at 2091, but you have a good reference point here because you're looking at yesterday's low, which was 618.04. And we are trading at 618.21. So keep a whole eye on that 1618 level, folks, because I don't see anything till 611.5. And also, this stock, if you're not selling it on the way up, good luck selling it on the way down.
Well, it does go trendy. We know that. Like if you look back, obviously, into after reported earnings back in April, just trended down every day for almost a month there. Then it trended up every day for like a month and a half. Then it started to get weak again, bouncing around. But then after the earnings report, it's been trending straight up here again. So it does go trendy. And when it starts getting a trend going, it sometimes goes that way for a while. So, and the relative strength wasn't great on Apple yesterday. I know the market turned around later in the day, but Apple was weak all day yesterday. Or at least, it was never really strong anyways.
All right, I do have to disclose I do have a position in Apple. I took a flyer on the 610 weekly puts yesterday. Got them up when they were trading up in the mid 620s. So it don't mean nothing if it don't go to 610 or pretty close to that level by Friday.
Other stocks we've got moving here that we want to highlight was we've got AT&T, which was actually weak yesterday, and Coca-Cola, which was actually weak yesterday. So what we're kind of starting to see is some of these defensive names. We're seeing a little bit more sector rotation where some of these defensive names are actually starting to come out of favor. They've been in favor for so long, but really the last couple of days is the first time in a long time that we've actually seen some of these names relatively weak.
Yeah, and a little bit was attributable for the J&J and the Pfizer, and the Lilly was attributable to the Alzheimer's drugs.
Right.
But AT&T is probably the one to focus on here. Just has had this monster run. Look at all these lows we're sitting on top of here. 37.33 was a 4-day low. You got the 41 yesterday, 47 the day before. Here's a kind of stock where when you get a little down opening like this, if it doesn't pop right away, then it's not going to pop. I mean, don't worry about a gap situation. I really like this 37.50 level. If you want to take a shot, in the low 37.40s, there's a swing number at 37.50 that, hey, it's worth it to cover it with a small loss after you have a chance of catching something off the open.
Yeah, and the same thing with Coca-Cola here. We had multiple highs here up and just struggling in these the low 81s there to get higher. And now yesterday just turned around and started selling off. So they've kind of given up with trying to slam it through that 81.25. Yesterday morning they just killed this thing for over $1.50. That's a monumental move for Coke on no news. You don't see Coke usually fall $1.25 intraday on no news. So here it is, just drifting lower here again. I think you've probably caught a few people maybe long, and they're going, oh, you can lose money on these stocks? I didn't know if you buy these defensive names, I didn't even know they could ever go down. So these trades are definitely crowded. Like we've been saying it all year, that the defensive names with the higher dividends have been attracting investors and value investors in there, and I even think there's some brokers putting people that don't want to that don't even like investing in the stock market because they're looking for yield into stocks like these. So when these things start to turn around, you could start to see a little bit of a sell-off here. So don't be surprised if these things do start to continue on with their weakness here. Pepsi is even looking like, look at that Pepsi chart here, Joel, and this whole 72.90s area. Like, I mean, what is that, 5, 6 tops we had? under that 73. We knew there was a big 73 seller there, and it's starting to look ugly here on the charts, looking toppy.
Looking ugly.
Oh.
Only you can look at a chart like, oh boy, that chart.
Well, no, but look at it.
Oh my God.
4 or
maybe
5.
you know what? Let me stand on my head and look at it, and maybe it's looking ugly. No, just going back to the Coca-Cola 79.50s level to keep an eye on that. Now looking at the Pepsi, 72.20 is basically a double bottom here. 72.19, 72.20. So those are a major area of support to look at. Just one other stock we need to look at, Faceplant. How you doing in that?
I'm doing okay. I'm just down. I told you I was starting. I had that reference point in 1980. I did buy it yesterday on the pullback here. I'll stop out if it gets below that 1982 and makes new lows. But I'm trying to call it the lows in. I think the low could still be in. It's trading 20.57. I bought it yesterday at 20.65. So I'm going to give myself the 75 cents. Starts to make new lows. I'll stop myself out. But I don't know. I think the low could still be in, although I didn't like the price action being so weak yesterday. So, tricky one to play, but as long as you have a reference point, you know where your out is, that's the whole key to trading.
Okay, and is ExxonMobil ever going to trade over 88?
ExxonMobil, this 88 level is just absolutely enormous. It touched it yesterday, couldn't get above it here again. We've highlighted this forever on the show. It's for 2 years here now. 88 has just been the number. When it gets up here, it doesn't trade above it. I'll be honest with you, I have a position in ExxonMobil. I'll take it off if it goes above that 88 level.
What do we call a six top? Do we remember?
Sextuple? Sextuple, yep. I think it's like sex.
Also,
sextuple.
just a quick note for traders. When you do get this will refer back to the tractor beam too. When you go up to that $88 level, and then you have the HFT guys shorting in 95, 96, 97, 98, they are providing artificial support for that stock in the low 90s and the high 80s because they want to push it back up there so they could short it again.
Yeah, they love this when it just trades like this, and that's why you've seen it. It gets locked in this whole HFT tractor beam where they'll sell it short at 87, 88, 89, then get on the bid at 87, 90, 91, 92, or 87, 80, and until it can get out of and start trading like 87, 75, 87, 70, then it breaks the tractor beam because all those high frequency traders have covered and it loses its artificial support. So it's funny, you can have a big resistance level, but then you can find support as so many traders. I mean, everybody's starting to talk about this 88 level. It makes me think eventually it will get taken out here, but it's still holding strong. I thought it might fall yesterday, and it didn't.
Okay, we're just still doing a slow melt here in the S&Ps. No big moves to the upside. Got to keep an eye on that 1387, folks. I just can't express enough. As if you look at the numbers posted on the S&P numbers tab, I have 1, 2, 3, 4, 5, 6, 7, 8. That's a 10-star number. You don't see. Yeah, you don't. Yeah, 87 a quarter, 87 and a half. You don't see many 10 stars from me, but you have one today. So good luck with that strategy, and we'll be back with you tomorrow.